Imagine you wake up tomorrow morning. You check your bank account. The number is exactly the same. But overnight, everything you can buy with that money has been cut in half. Your rent just doubled. Your groceries doubled. Your savings, your 401k, the emergency fund you spent years building, it's all still there on paper. But in the real world, it's worth half of what it was yesterday. That's not a movie plot. That's not some doomsday conspiracy theory. That's exactly what happened in Argentina in 2001, in Venezuela in 2016, in Zimbabwe in 2008, and right now, more. Economists, hedge fund managers, and central bank insiders are quietly asking a question they haven't asked in decades. Could it happen to the US dollar? And the answer is more complicated than you think, and it's going to affect you whether you're ready or not. In this video, I'm going to show you exactly what a dollar crash actually looks like, not in theory, but in real life. Then I'm going to show you the 3 warning signs that show up before it happens. And at the end, I'll tell you the 5 things people who survive currency collapses always do first, before the panic starts. Stick around, because the last one is something almost nobody talks about. First, let's get one thing straight, because most people misunderstand what a dollar crash actually is. A dollar crash doesn't mean your bank account disappears. It doesn't mean America stops existing. What it means is that the purchasing power of the dollar collapses fast and without warning. Think about it this way. In 1970, a movie ticket cost about $1.55. Today, that same ticket costs $15. That's not because the movies got 10 times better. It's because the dollar got 10 times weaker. And that happens slowly, over 50 years. A crash is when that same process happens in months, or even weeks. Now, the dollar isn't just America's currency, it's the world's currency. About 88% of all international trade is settled in US dollars. When you buy oil from Saudi Arabia, even if you're from France, the transaction happens in dollars. When Vietnam buys wheat from Australia, dollars. This is called reserve currency status, and it's the single biggest reason the US has been able to spend trillions it doesn't have without immediately feeling the consequences. But here's what most people don't realize, that status isn't permanent. It isn't written in the laws of physics. It's built on trust, and trust can be lost. So the real question isn't just, will the dollar crash? The real question is, what would have to happen first? And that's where it gets uncomfortable. There are 3 specific warning signs economists look for before a reserve currency collapses. Most people have never heard of them. But here's what's scary right now. In 2025, all 3 are scary, quietly flashing. The US national debt just crossed $35 trillion. To put that in perspective, if you spent $1 million every single day since the year 0, since the birth of Christ, you still wouldn't have spent $1 trillion by today. The US owes 35 of those. And the problem isn't just the size of the debt, it's the interest on it. The US is now spending more on interest payments than it spends on its entire defense budget, more than it spends on Medicare. And unlike other spending, you can't cut interest. You owe it every single month. When a country can't pay its debts, historically, there are only a few options: raise taxes, cut spending, or print more money. And printing money is what destroys the value of a currency. It's the beginning of the spiral. De-dollarization. This is the one that should be keeping policymakers up at night. For the first time in decades, major economies are actively trying to trade without the dollar. China and Russia have been settling energy deals in yuan and rubles since 2022. Brazil and China announced they'd settle trade directly in their own currencies, bypassing the dollar completely. Saudi Arabia, America's oldest oil partner, has had quiet conversations about accepting yuan for oil. And the BRICS nations, which now represent nearly half the world's population, are openly discussing a shared currency that would reduce dollar dependence. Now, none of this means the dollar dies tomorrow. But every percentage point the dollar loses as The world's reserve currency is a percentage point of trust being withdrawn, loss of confidence in institutions. This one is harder to measure, but it might be the most important. Currency crashes aren't just problem. Economic events, they're psychological events. They happen when people stop believing the system will protect them. And right now, trust in central banks, governments, and financial institutions is at historic lows. A 2024 Gallup poll showed that confidence in U.S. banks dropped to levels not seen since 2008. And when confidence cracks, history shows it doesn't recover slowly. It falls off a cliff. So those are the 3 warning signs, and they're all present to varying degrees right now. But here's where I want to stop and be honest with you. A lot of finance channels will stop here and tell you the dollar is definitely going to crash, and you need to buy gold or crypto right now. I'm not going to do that because that's not honest, and you deserve better than fear-based content. The truth is, the dollar probably won't crash the way people imagine, but it absolutely can weaken significantly in ways that will directly affect your life. And understanding the difference is what separates the people who are prepared from the people who are blindsided. So let me show you what the realistic scenarios actually look like. Scenario A, the slow erosion most likely. The dollar doesn't crash in a day. Instead, it slowly loses its dominance over 10, 20, 30 years. The dollar doesn't crash in a day. U.S. can still pay its bills, but importing goods becomes gradually more expensive. Your purchasing power quietly shrinks year after year. You don't notice it in a single month, but over a decade, the damage is massive. This is already happening. The dollar's share of global reserves has dropped from 72% in 2001 to around 58% today. Scenario B, the sharp devaluation possible. A major geopolitical event, a war, a debt crisis, a political shock causes a rapid loss of confidence. Foreign countries start dumping U.S. Treasury bonds. The dollar falls 3-0, 40% against other currencies within months. Imports get dramatically more expensive overnight. This is the Argentina 2001 scenario. It has happened to major economies before. The U.S. isn't immune by law, only by perception. Scenario C, the replacement, long-term risk. A new global reserve currency emerges, whether it's a digital yuan, a BRICS currency, or a gold-backed alternative. The dollar doesn't disappear, but it becomes just another currency. No longer the world's default. This is the British pound story. In 1900, the pound was the world's reserve currency. By 1956, the dollar had replaced it. The pound still exists, it just matters a lot less. And Britain's standard of living declined relative to the US for decades after. Now here's the thing. You can't control which scenario plays out, but you can absolutely control how prepared you are. And that brings us to the most practical part of this video. I promised you 5 things that people who survive currency collapses always do first. These aren't random tips. These come from studying what actually worked in Argentina, Venezuela, Zimbabwe, and Weimar Germany. Here they are. The 5 things to do now. 1. Diversify your currency exposure. Don't hold 100% of your savings in a single currency, even small amounts in a foreign currency. ETF, or assets priced in euros or Swiss francs, gives you a buffer. When the dollar weakens, these go up in dollar terms. 2. Own real assets. In every historical currency collapse, people who owned physical things, real estate, commodities, farmland preserved wealth far better than people holding cash. Hard assets hold value when paper doesn't. 3. Reduce dollar-denominated debt. This sounds counterintuitive, but during a slow inflation, fixed-rate debt can actually be okay because you repay it in cheaper dollars. However, variable rate debt can destroy you if rates spike. To combat inflation, pay down high interest, variable debt first. 4. Build skills that are currency-proof. In every economic crisis, the people who stayed employed were the ones with skills that couldn't be easily replaced: tradespeople, medical professionals, people with rare technical expertise. The best hedge against inflation is being indispensable. 5. Stay informed but stay calm. The biggest mistake people make in financial crises isn't the wrong investment. It's panic. Panic. Selling. Panic. Buying. Panic decisions made at 2 a.m. after reading too many doomsday headlines. The people who come out ahead are the ones who had a plan before the crisis, not the ones scrambling during it. Here's the honest truth about all of this. The dollar probably won't crash next week, but the slow, quiet erosion of purchasing power that's already happening. It's been happening for decades. And the question isn't whether you'll be affected. You already are. The question is whether you're going to be one of the people who noticed, made a plan, and acted, or one of the people who look back and wish they had. And that's exactly why this channel exists. Because the gap between the economy being reported and the economy people are actually living in, that gap is getting wider. And someone needs to talk about it honestly. If this video gave you something to think about, subscribe because we're going to keep going deeper. Next week, I'm going to show you exactly what happened inside Argentina's economy in 2001 week by week, and what ordinary people did that either saved them or destroyed them financially. You don't want to miss that one. I'll see you there.